Yeah, morning trades. We've got the equity bulls taking this one today. It's been an aggressive move. Maybe that's because the market's very short gamut, and when you do have moves, you can have big moves up or down, and maybe that changes once we get past OPEX. We'll have to see. But generally speaking, the bulls have been in control. Maybe some of that's down to what we saw in China yesterday. We saw the H shares and the Hang Seng having a pretty big day. There's a big meeting going on between the political minds. And if you have a look at the way the Golden Dragon Index is traded on the Nasdaq, it's up 5.2%. So there's probably a belief there that some of the chokeholds that's been on the tech companies, the regulation that's been put in place, maybe that some of that could be unwound, and that's boosting the tech trade more broadly, and certainly China has feasted on that one as well. But generally speaking, if you have a look at what we've seen, the retail sales numbers were pretty good, 90 basis points there. The control group was up 1%. Now, if you have a look at what that means that people have boosted their expectations of GDP. The Atlanta Fed nowcast GDP model for Q2 is running at 2.5%, up from 1.96%. Jerome Powell also spoke 2 hours before the end of the close. His comments were undoubtedly hawkish. He said that the Fed would raise the Fed funds rate well above neutral if it was needed, and he also said that he wants to see inflation lower in a clear and convincing manner. Now, we did see the S&P roll over a little bit. You can see here in the futures that we dropped about 40 handles, and then the buyers came back in, and we closed pretty close to the high. So market was in a buy the dip mood on the day. 88% of stocks were high. We saw materials, financials, and tech working quite well. So we should see the ASX and the Nikkei open on a positive day. But yes, given what we saw yesterday from China, perhaps the market there under a bit of pressure on the open. Interesting as well, we've seen a massive move in rates again, especially at the front end of the curve, and that could have been a negative for equities, but it wasn't. We've seen about 11 basis points being priced into IS by the end of the year. We're now left with about 200 basis points there as well. Interesting as well, it hasn't really resonated in the dollar. We've seen the dollar down against pretty much all currencies, certainly against the euro and against the pound, where the pound's really been one of the best performers. Good jobs number there, but we've rallied from around 123.30 into 125, and we sort of bubbled along through most of the trading session. A flat move in gold, a bit of weakness in the oil price there as well. And we've got our eyes firmly on wage data coming from Australia. So what's your Aussie exposure today?